Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for March 15th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the market is heading into FOMC. We have FOMC statement later on this afternoon and the Fed fund interest rate decision. That's going to be what the market here is looking forward to. Perhaps an impulse range may have formed here over the last day here, but basically the 76.5 down to about the 54s, that is the range right now. That's the trading range, and fading the edges is the best, offers the best outcome right now. Getting down here toward the previous low, getting out here toward the high, anywhere in that zone to reject it back in is a good idea here heading into the report. But after that, we got to see which way the market's going to go. Obviously, anything above 76.5 begins to squeeze to the next upside target. We could be looking at 24.42 as the next major, 24.44 as the next major upside target ahead. Again, any failure to find acceptance above 76.5 could lead to a push against the range, and any move into this LVN would be a fantastic buying opportunity. This market remains very, very bullish, so any pullback of any magnitude still is a great idea to buy. And right now, there's no guarantee that we see a further pullback, so we'll see what happens after the report, but this is a great range to watch right now for fades and eventually for expansion. If you take a look here at the intraday time frame, you'll see the range here. Very, very clean trading range that we have formed. 23.54 on the bottom end. On the top end is at 76.5. This is the impulse move right here, and you can grab that high and low and the midpoint of that range, and that's going to be the range that you can watch for fade opportunities and bull and bear traps. Again, once we see expansion, we can use this range for range extensions as well. All right, take a look here at crude oil. Here's crude, higher time frame pivots. You know what I'm going to do? I'm going to put this on the monthly pivots right now. Take a look here. After we saw expansion from the previous month's range, here it is. So that's the previous month's high, previous month's low. Additionally, this is the trading range. We saw expansion through the previous month's low and a continuation precisely into the 100%. I call that the S100 target on the PivotBoss pivots, and this is monthly. So that's basically a monthly expansion to the 100% target. We see a big rejection tail that forms, and now the market appears to want to look like it wants to bounce. Now, one thing to keep in mind is we have this impulse high and this impulse low, and if this sets the new key range here, that would imply a bounce back toward the midpoint. That's going to put you at about 50.77 on the midpoint, so we could be looking at that as the next short-term target if a rejection signature begins to form down here, as it already is. Keep in mind, the downside break to me still means that we could be vulnerable to much more weakness ahead. If you look at this here, this is a longer term idea. For example, 52. Look at how the market attempted to hold above there, forming a box, and then the stops get released to the downside. If this thing does bounce in the 52s, expect bears to come in and defend very, very rigorously at that level for a shot at reaching 42, which is the lower end of this previous distribution. So it attempted to hold above that distribution, is failing, and now any bounce toward 52 and into 52 could be a significant selling opportunity for bears looking for 42s. So that's something to keep in mind from a longer term perspective. Let's drop it down to the intraday time frame. Right now, not the best at the moment. We do have crude oil inventories today. EIA report comes out 9:30 a.m. Central. At the moment, we have higher lows squeezing into resistance. That typically is indicative of a squeeze to come. But right now, the edges really, really are out here. And we got to see how this responds above 48.80. Above that zone begins to squeeze again back toward these upside targets. And the primary upside target for the day would be 49.39, and the average target would be 49.74 should this continue higher. All right, let's take a look here at gold futures. Here's a look at gold. One thing from the higher time frame, We've seen a major decline here recently. I mean, this is about as much selling pressure as we've seen since the end of last year. It's been all strength since. And so to break back below 1220 and to continue through that level, remember after we saw that failed range expansion above the high, that's very, very bearish. Now we're forming a little bit of a range down here on these lows. The thing that we talked about to start the week was that a pullback into this pivot range would be a great selling opportunity for a continuation toward 1180. And so far that has been the path. So rejection day, here's a midpoint retest. Again, here is the previous close. So the previous week's close is being used by bears today to defend for a shot at seeing further weakness toward 1184.5 and into 1180. So that's the plan. It's still in the works. But again, if you start to squeeze above this previous close here, you may be retesting the high. So right now, you want to start to see a downside push to 1195. And again, that may be something that occurs here after the FOMC statement and interest rate decision occurs. All right, let's take a look here at the intraday time frame. Looking at the intraday with gold right now. Again, the idea is that bears are defending at the moment. You see a downtrending channel at the moment. Here's 1204.5 is the previous close, upper end of this channel. Could be looking at a short-term selling opportunity into 1196 today. And again, bears want to keep 1204.5 offered. Above that zone could squeeze again to retest the highs at 1211. All right, lastly, let's take a look at the NQ. NQ has a great trading range here on the intraday time frame. If we look at the higher time frame for a moment, again, this has been very, very bullish. The NQ, there's that 2376 half that we referenced in the ES. A level that's very similar is at 53.6175, but on this side, it's keeping it bid. It's also the midpoint here of the previous week's range. We continue to be in a very highly structural bullish trend here, so pulling back into this area has been a buying opportunity. But right here at the upper end, 5400 half, that's the previous week's high. 5401 was the previous high before that. So right now, 54 is big time resistance, and we have an uptrending market. That's an ascending pattern that usually breaks to the upside. At some point, should we get above 54.05 or so, we could be looking at a continuation to 54.42 very, very quickly. And again, the range to watch here is going to be 5400 down to 5360. That's the range right now, looking to fade the edges and eventually see expansion one way or another. All right, taking a look at the intraday time frame, you can see how clean that resistance is right now. And the lower edge of the range, 53.61, 54. One thing to keep in mind is we're looking for signs of rejection on the upper end for a return to value, 53.85. Should price get down into this zone, it could be a fade back up. The short-term idea here would be to look for rejection. So one thing to watch for, if we pop above 5400 and fail, that could be a great opportunity to fade this thing back down across the range. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.